Good morning. Welcome to Member Focus Monday. I'm Christina Schaefer, Director of Social Media for HAR, and I am joined this morning by Lawrence Dean. Welcome, Lawrence.
Hey, thank you so much, Christina. Thank you for having me. Excited to be here. Good Monday morning to all of y'all.
Absolutely. We're very excited to have you back. You've been on our program before, but it's been a little while. So if you don't mind, let's just take a moment and have you reintroduce yourself. Tell us a little bit about who you are and what you do.
Yeah, absolutely. My name is Lawrence Dean, and I'm the regional director with a company called Zonda in Houston. We were formerly known as Metro Studies. That name may be a little more familiar to some HAR members, but we were founded in Houston, about 42 years ago. And my 8-year-old son does the best job of describing what I actually do. He says that daddy goes out and counts all the new houses and tells everybody how many houses he counted. It's actually pretty close. We're a market intelligence and real estate data firm for the home building and land development industries and banks that lend to them and a whole kind of ecosystem of related fields to building new communities and homes.
Wonderful. Thank you for sharing that, and I like your son's description of it. That's a that's a good way to describe it. So I'd love to get right into it with you because we have a lot to discuss. And if you have questions for Lawrence in the comments, you can definitely type those in as we're going through. Just overall, generally, how is the real estate market doing?
All in all, it's doing surprising, or maybe not surprisingly, but it's doing very well. I spend most of my time focused on housing and new housing, and that piece of the real estate market in Houston and across the country really is continuing to do very well. But we do look at kind of all facets of real estate, and all in all, in Houston, most sectors of real estate are doing very well. Industrial space, for example, has seen several quarters in a row of record absorptions and record square footage transacting. You look around other commercial real estate spaces and see similar levels of volume.
Okay, very good. So we're competitive here in Houston. How how does the Houston market comparing to other major cities here in Texas?
Yeah, absolutely. Looking through the filter of the new home market, we're still the number two volume new home market in the country in terms of annual starts, behind Dallas Fort Worth, and I'll get into a little bit more of that here momentarily.
Hmm.
Other sectors of real estate, uh, apartments, we're probably performing about on par with the other major Texas metros.
Hmm.
Industrial, we're probably exceeding the other Texas metros' performance, or at least matching it.
Hmm.
Retail is a difficult class of commercial real estate right now, all across the board, and Houston is no exception. Houston's office market does continue to trail just a little bit the other major metros in this part of the country.
Okay, and I have some more questions about that in just a little bit as far as the office market is concerned. So a little bit of a deeper dive here. The apartment market. How is that currently looking, and what are the current occupancy rates?
Yeah, absolutely. So, first of all, Zonda, we don't track apartment data ourselves.
Hmm.
So, shout out to Bruce McClenny and his firm, Apartment Data Services. This is his data that I'll be quoting, but we do
Hmm.
follow it very carefully. And all in all, the apartment market in Houston is performing very well. During much of the sort of pandemic period, which I would define as starting in March and April of 2020,
Hmm.
from that time frame all the way really into I would say early to midsummer of 2021, the apartment market was okay in terms of occupancy rates and rental rate growth, but still kind of suboptimal, cruising around consistently about 88% occupancy, which is lower than the apartment operators want to see. Fast forward to today, and really starting, if this is mid November today, and really the last 90 days or so, the apartment market has ramped back up to not just, if it was suboptimal before, now it's, I don't know, whatever the opposite of suboptimal is. We're at 92% occupancy, which is great. That's a happy place for the apartment industry. And when you look at it on an annual basis, through the third quarter of 2021, if that makes sense,
Mm-hmm.
there's been nearly record absorption of apartment units. More apartment lease ups, apartment units absorbed in a 12-month period than we've seen any time since 2005. And as a result, a related result, the year over year average rent appreciation or rent rate growth is
Mm-hmm.
12.8%. To put that in context, that's nearly double a normal good year. And it's fantastically better than what we saw during much of the pandemic period.
Yeah, absolutely. Well, I mean, that's great to hear that it's back at an optimal rate, as you're saying.
Yeah.
Yeah. So, what about the new home market? How is that doing, and how is that compared to other major Houston cities?
Yeah, absolutely. So that is really what I spend most of my time focused on.
Mm-hmm.
Like I mentioned a second ago, the new home market in Houston continues to be the second highest volume new home market in the country, behind Dallas Fort Worth. When you rank all the major metro areas, it in the last 12 months, this is the trailing 12, ending at the end of third quarter of 21. We saw 43,170 new home starts. That's up 25% from the previous 12 months. And to put that in kind of context, a normal, good, perfectly good, not exceptional, but perfectly good year in the Houston new home industry would see 28, 29, maybe 30,000 new home starts. And in this last 12 months, we're at over 43,000. So still a very high volume market. Uh, Dallas Fort Worth, though, still is exceeding us. When you look at a ranking of all the biggest metro area housing markets, all four major Texas metros, Dallas Fort Worth, Houston, Austin, and San Antonio, are within the top 10 in terms of annual starts volume. So still very strong, still very tight inventory. Builders are still facing challenges, the same challenges that many industries are right now around materials, supply chain, other unique issues related to building, or land costs, lot development timeframes. It's taking longer to develop lots. It's taking longer to build homes
Mm-hmm.
for all of those reasons. And so we continue to be and this is not unique to Houston, but Houston is definitely falls in with this, that we're in a unique time that demand and there being interested people that want to buy a new home is kind of the only challenge that the new home industry doesn't have. Building homes is very difficult. Developing lots is very difficult, much more so than normal. But demand from interested home buyers, kind of the only problem that they don't have.
Yeah, absolutely. So, those numbers and those different factors, are they concerning at all to you?
Not concerning.
Mm-hmm.
I take maybe a slightly contrarian view in that this trailing 12 months, 43,000 annual starts that we've had. I am of the educated guess opinion that that's probably the peak volume that we'll see,
Mm-hmm.
and that when we look at things on a quarterly basis, and so when we look at quarterly and annual starts on a quarterly cadence in the fourth quarter of 21 and the quarters of 2022, I expect that we'll see starts go down. That said, that should not be perceived as terrible news. When you're in a 43,000 annual start environment and a typical good year is only 30,000, you can go down several thousand units and still be in what, by all accounts, is a phenomenal new home market. And that's
Yeah.
where I think.
Okay, wonderful. So, what about the different price ranges? Sometimes we see that certain price ranges see more success than others. So, what price ranges are currently seeing the most success?
Yeah, certainly, Christina. Well, and home pricing, be it new or resale, is a very top of mind topic these days,
Mm-hmm.
as due to, and I can speak more on the new end, due to land costs increasing, labor costs increasing, building materials in costs increasing, and that all happening against a situation where there's just nearly unprecedented new home demand.
Mm-hmm.
Pricing has gone up quite a bit. Talking to builder clients, base pricing, the price that a builder may list a particular floor plan that they'll build in a particular subdivision. That pricing over the last 12 months, in many cases, has gone up as much as 20 or 25%, which is just phenomenal. Maybe not in a good way, but phenomenal for Houston, considering that we're usually a very steady Eddie, 4 to 5 to 6% a year annual appreciation rate type of market. And so pricing's gone up, and the type of home that maybe a year ago would have been base priced somewhere, 250 to 300,000 might now be 3 to 350 or closer to 4. And
Mm-hmm.
so, to answer your question more directly, there's still the most demand for homes, generally speaking, base priced under 300,000. Because that's, if you think of demand for housing as kind of a triangle, there's the most people that live in the Houston area that can afford that type of home, as opposed to kind of the top of the triangle. Imagine a million plus.
Mm-hmm.
That said, it's getting much more difficult for home builders to produce a new home under 200 or 250,000, and increasingly, it's somewhat difficult, although not impossible, to produce a home under 300,000. So
Yeah.
that more affordable, attainable price band has the most volume, but it's increasingly challenging.
Yeah, the numbers are definitely going up. I mean, even for us, what we define luxury real estate, that number went up from 700, I think 700 or 750,000, somebody can correct me in the comments, to a million this year. So, the definition has definitely gone up. We have a question here from Nick. He said, if the price has gone up 25% for new home construction, how much have costs gone up for builders, and are they seeing more or less profits?
So the general answer to that question is they are not seeing less profits, but by and large, they're not seeing more profits. Or if they are, they're not seeing much more profits.
Mm-hmm.
Profits across the board, when I talk to other builders and see other research, especially about publicly traded home builders, profits are strong. They're not bad relative to past periods, but they're not nearly as strong as one would think when you see the price of a home go up 20 to 25%.
Mm-hmm.
Much of that is capturing cost increases.
Okay, very good. Thank you for that.
Mhm.
And if you have any other questions, those of you that are tuned in, if you have questions, please type those into the comments, and we will get to those as well. So, as you know, Lawrence, our members are all over the Houston and surrounding areas. What parts of town are you seeing the most growth in?
Yeah, certainly. So Houston is fortunate, unlike maybe some other big cities across the country, in that we have strong new home demand and strong new home growth, kind of in all directions of the clock. A lot of long-time real estate people refer to the clock in Houston. So you look at Loop 610 and Beltway 8 and the intersecting highways, it's kind of look around like a clock. So we do kind of have strong volume and strong demand in most directions, most all directions of the clock. That said, there's a few areas that are seeing stronger growth than others. We divide at Zonda, we divide the city up into 9 kind of very generic cardinal direction based market areas like northwest, west northwest, things of that nature.
Mm-hmm.
Pretty self explanatory. And in the last 12 months, we've seen, again, I mentioned starts volume overall is up about 25%. Well, in what we call the far north market area, which is most of Montgomery County, it only doesn't, the only part of Montgomery County that isn't included in that is the easternmost portion closer to Highway 59, maybe in Porter New Caney or Splendora schools. That's not in that. But everything else in Montgomery County is. And Montgomery County, or more to the point, what we call the far north market area, saw 37% year over year starts growth.
Wow.
37% more new homes started in the last 12 months than in the previous 12 months. Another market area that's actually immediately adjacent to that that saw greater than the norm growth is what we call Northeast. And Northeast goes all the way from, kind of just outside or just west of Highway 59 up in
Mm-hmm.
East Montgomery County, all the way lapping down to I 10. so the north line of I-10 as it goes through Baytown, Mont Bellevue, etc. So a pretty big area, but nonetheless, that area saw 34% year-over-year storage growth.
Wow. I'm echoing what I'm seeing in the comments. Wow. Yeah,
Yeah.
those are significant numbers. So, I always like to kind of get your perspective on this, just what you think are the next up and coming suburbs. Are those it, or do you think there's other areas that are going to start seeing more success?
Well, it's a more nuanced answer than that. Some
Mm-hmm.
of that answer definitely lies within those two big kind of generic market areas. Areas that we are seeing continue to grow and continue to expand that maybe won't, as the path of growth moves further and further out, maybe these areas won't conventional suburbs, let's say 10
Mm-hmm.
or 15 or 20 years ago, but as the Houston area has grown, now they are. Starting with up north, definitely seeing Willis become a kind of mainstream, higher volume suburban area. The Howard Hughes Corporation really started this with the Woodlands Hills, and now there's several other sizable communities in planning or near-term opening up in Willis. And while it's a pretty fair clip up 45 from downtown Houston, it's a very reasonable commute to many northern Houston area job centers, and many of the tracts that are being developed into new communities have almost unprecedented direct access to Interstate 45, and so it makes those areas or that area a much easier place to live. And it's actually got hills and trees. No place in Houston has hills, but Willis, you actually drive around and there's hills in the subdivisions. Houston Hills, but nonetheless. Other answers to that question, kind of going with the up north theme, Magnolia. Magnolia, with the completion of a large portion of the Aggie Expressway 249, Magnolia has seen and will be over the next few years seeing tremendous growth. The Audubon community, which is a large master plan up there, relatively recently opened, and there's several more sizable communities in planning up that way. The other up north answer is more northeast, Splendora, up 59 to where 242 intersects 59. Many new communities, many of which are a little more affordable in nature, opening up in that area, and that with the improvements to 59 proximity to the Grand Parkway is a very manageable commute location.
Mm-hmm.
Thinking a little further to the south, out due west, Brookshire and Fulshire. Fulshire has been becoming a suburb and for quite some time, and that's only continuing with multiple new communities and expansions of existing communities opening up. Brookshire is increasingly seeing new community development as well. Then, kind of the opposite end of the world, Mont Bellevue, east of Baytown. Baytown itself is seeing quite a few new communities and new retail pop up. Mont Bellevue is about to have its first large scale master plan community open up on a 1,600-acre tract, kind of in the middle of the town of Mont Bellevue. Finally, one last area that we're seeing tremendous growth is Richmond Rosenberg, even as far down 59 as Beasley and almost to Kendleton, just as areas to the north, established Sugar Land, the more established parts of Richmond reach build out. That's where development is pushed out to, and it ends up being a pretty tenable commute for residents in those areas.
Okay, wonderful. It sounds like it's continuing the trend of Houston, or what we call the Houston, area,
Right?
just spreading and spreading. Yeah. We have a few questions coming in, if you don't mind.
Yeah.
Going back to the pricing, Andrea asked, how long do you believe these price increases are sustainable?
That is a very good question. Builders have reported to us beginning kind of midsummer that they were beginning to see they were beginning to see the signs that maybe we had reached the level that we were going to be able to reach with pricing.
Mm-hmm.
More pushback, or maybe not pushback, but hesitancy from buyers, increased appraisal issues. Not a huge volume of appraisal issues, but some. whereas in Houston we typically have nearly none, and other kind of related factors. And so I am of the, again, this is kind of the educated guess opinion that we're probably at a point now where we're going to begin to see, and I can only speak to the new side on this, really,
Hmm.
new home prices kind of plateau. I wouldn't expect them to really go down in any near or even medium term, but I wouldn't expect to continue to see, if I'm on this call 1 year from today, I don't think I'll be telling you that new home base prices went up 20 to 25% again
Hmm.
from what they were right now.
Okay, that kind of answers Connie's question here. She was saying when the supply chain and material costs begin to stabilize, how do you anticipate home prices will be impacted?
Yeah, certainly, Connie. So that will definitely allow pricing to stabilize. It's a tricky dance that a home builder has to do because imagine they've been in a subdivision, 2 years today, let's say, and
Hmm.
so they've sold in the last 12 months or 15 months 150 homes to home buyers at this price, what it's been. The Because of the elevated construction materials costs, etc., they can't go in and immediately drop the pricing $50,000 to accommodate the fact that maybe material costs have gone down,
Hmm.
because that will create negative equity for the 150 home buyers that have bought homes, and a PR nightmare, and just for a lot of reasons, it's not the right thing to do, and so it will likely result in more of a stabilization than plateau than price declines.
Hmm.
And feedback we get from the from the building materials manufacturers is that they don't anticipate costs going back to where they were, let's say in 2019 or 2018. And so those costs, those input costs, can reasonably expected to be kind of plateau as opposed to dropping a meaningful percentage as well,
Okay.
further supporting that thought that pricing will just kind of plateau, not decline.
Okay. Very good. I don't know, Lawrence, how closely you follow foreclosure data, if at all. But Melinda had a question. Do you see foreclosures coming at all?
So, first answer, I really don't follow it
Hmm.
as closely as other pieces, but do we see foreclosures coming up
Hmm.
at all? So far, the data is not bearing out when you look at the commercially produced foreclosure data that there's a larger number of homes going into foreclosure. Right now, because pricing has gone up as robustly as it has, many homeowners have the most equity they've ever had in their homes. And so that puts them in a position to where if they have a job loss, a health emergency, whatever reason, they can no longer afford to make the monthly payment on that home. In many cases, I hesitate to say most or all, that those kind of absolutes get you in trouble, but in many cases, that home buyer or that homeowner has enough equity, they can just call a realtor and put a sign in the yard and sell it and
Hmm.
be done. So there's no foreclosure, no distress. Will
Hmm.
that be the case all the time? No. But because we're in a high equity environment, due to strong appreciation rates, that solves a lot of problems for a lot of people.
Okay. Very good. Um, One more, I think, question that I see here. You and I discussed this a little bit last week, but with Zillow announcing that they are terminating their iBuying business, and it says here they plan to sell 7,000 properties. So they would be hitting the market within the next year. Do you have any thoughts on that? And do you believe that's going to affect the Houston market at all?
Yeah, absolutely. So prior to us talking about that last week, I had not thought about it at all, to be brutally honest. But after we talked about it, I tried to arrive at a real answer to that question. And looking around, I did a search of all of the county appraisal districts, Hillers County, Montgomery County, etc., their appraisal district websites, figured out what corporate entity name Zillow owns their homes under, and figured out that at least at the time, and granted that was earlier this year, at the time that the appraisal district certified the records, it looks like, and I could completely be wrong here, there may have been something I missed. Based on this analysis, it looks like Zillow owned 448 houses
Okay.
in Houston. So let's say I'm wrong, that they bought a bunch more since at a faster pace than normal since the appraisal districts certified their records. Let's say it's 1,000.
Hmm.
Well, the last HAO data I looked at through the end of September, 66,000 resale homes and change resale homes had sold in Houston year to date. So let's say the answer is not that 448, but 1,000. That means their total inventory would represent 1/66th of the resale homes that sold through September, not even through the whole year. So I say all of that to say I don't see it being a meaningful impact. And
Hmm.
there's been moves by some of the big real estate investment trust and private equity driven rental home operators to buy their houses in pools. And so
Hmm.
that would, if an Invitation Homes or somebody like that buys some meaningful share of that 448 or 1,000 or whatever it is homes in Houston, that takes even that many more off the market. So
Okay.
probably this is a semi-educated guess, not a fully educated guess, but probably not much of an impact at all.
Okay, very good. Going back to some of the numbers and that you mentioned at the top of the show, office space. How is the shift to virtual and hybrid offices for many companies? How has that impacted office space?
I think it is early to it's a little early to be able to give a kind of final answer on that.
Hmm.
In the current state, there is definitely less lower volume of office rental activity happening than there has been in past recent years. Office rental rates, with the exception of kind of the newest, nicest marquee Class A buildings, are seeing year-over-year declines as opposed to gains, kind of
Hmm.
the opposite of what the apartment industry is seeing. Long term, it's I still feel as though it's a little early to tell. There's a lot of armchair quarterbacks and pundits saying that people will never go back to the office, or no, they'll all be back in the office by this time next year.
Hmm.
Yeah, I'm not smart enough to know that answer. I think I feel like the answer around office demand, give it 18 months and we'll really know what the situation is. It's still in flux right now.
Okay, very good. We did have someone ask about how to get the area reports that you mentioned earlier. So, how could they get those reports that you mentioned? Do you provide those to the public? I know HAR we put out reports, and we can put a link to that in the comments. But do you put out reports that they could access?
Well, so the business model for Zonda is that we're a membership organization, not unlike HAR, but a much smaller membership of home building companies and banks, land developers, etc. Generally speaking, this data and these reports are kind of a member benefit,
Hmm.
exclusive to members. That said, we will usually publish kind of a one pager summarizing the high points and of what we're seeing. And I'm glad to share that with anybody that would like that information.
Okay, wonderful. And how can they get in touch with you, Lawrence?
Probably the best way is by email,
Okay.
ldeen at zondahome.com.
All right. Wonderful. So, the big question here, your projections. What are your projections for the housing market and the, of course, inevitable words that we hear and see, boom or bust? What are your thoughts?
Yeah, absolutely. Obviously, that's a top of mind question as well.
Hmm.
Those of us that have been around this industry long enough to have been in it. I started in 2001 in the home building space, and so I definitely, and those of us that have been in the industry this long, have definitely seen a true boom and a true bust. And so that tends to be the language that we think around. I forecast that what we will see going forward is none of the above. Right now, we're at an elevated, and again, this is new home volume that I'm speaking to the most. Right now, we're at a highly elevated volume of new home activity, new home starts. And the other piece I didn't articulate yet is that even though we've had all these new home starts up 25%, our inventory of homes, completed homes available for sale, even homes under construction available for sale, is at record lows. So that points to that even though we're starting all these homes, the vast majority of them, a larger share than normal, are actually already sold to a home buyer. So we're at a greatly elevated volume of activity. Will we stay there forever? No, I'm actually already forecasting that we're at peak volume. Does that mean we'll see a bust? No. If a typical good, almost great year in the Houston new home industry is around 29 to 30,000 new homes, and we're at 40 new home starts, and we're at 43,000. If we fall down to 40 or 37 or 36,000, 36,000 is still 20% above a normal good year. That's not a bust, but it is a decline in volume from what we've been seeing. And I think that's what we'll see.
Okay, wonderful. You've shared some great information with us this morning, Lawrence. Is there anything else that you'd like our members to know, or anything they should watch for?
Certainly, certainly. The new home space is very, very active. There's a lot of different options available for clients that want to buy a new home. Things I would watch for, and I guess I mean this in the positive sense more than the negative sense, is that we should expect to see quite a few new communities opening up in the periphery, and some even further into the city over the next 12 to 18 months. And so be on the lookout for new places 9 or 12 or 18 months from now that you don't even know exist presently, because they'll be there.
Wonderful. Well, again, Lawrence, thank you so much for your time this morning. I know our members greatly appreciate you taking the time to break down these numbers and these areas for us and give us your thoughts and your projections. Just for all of our members to note, we will not have a Member Focus Monday for the next 2 weeks as we take time to celebrate the Thanksgiving holiday. But we will be back on December 3rd with Patrick Jankowski of the Greater Houston Partnership. Many of you are familiar with Patrick. So mark your calendars for December 3rd. Patrick will be sharing his thoughts on the economy, real estate, and of course his forecast. So we look forward to hearing that, as we enjoyed hearing this morning from you, Lawrence. Again, thank you so much for your time.
Thank you. It's been my pleasure. Thanks for having me.
Thank you. Have a great week, everyone. Bye-bye.